Good morning, Tony Sycamore here. It is May the 16th, bringing to you a video analysis of four key charts of interest for the week ahead. I want to start this week with the ASX 200 on the weekly chart. What you can see here is typical of the price action in May. We actually had the ASX 200 falling about 3% from this 71.72.8 high. Now, we also know this high is in a very key area of resistance because the all-time high from pre the COVID pullback was 71.97.2. And as you can see, this red bearish candle that has formed is sitting on trendline support coming in around 69.75-ish. So what I'm watching for this week is some follow through to the downside of or below the low of this candle here, this weekly candle. In terms of what that means, well, we're looking for some lower price action below this 69.66 low. Looking at the daily chart, you can see that there has been a trend channel in place for the better part of 6 months. And this 71.22 high picked it up beautifully. We got what's called a tweezer top here. And then what I think is probably the first leg of a pullback. What I will say to you is the minimum average requirement for a pullback in May is already in place. That's typically around 3%. So already there. My estimation is we're going to see a bit of a deeper pullback this May, potentially back towards this trend channel support, which as you can see is coming in around 68.50-ish. That'd be the first area where I'd be looking for signs of basing. If we went back to the weekly chart, however, you can see that the extent of this uptrend has been large, and it wouldn't surprise me to see a pullback if we were to break 68.50-ish back towards 6,700, which is this area here. And this would be viewed as a wave 4 before the next leg higher, which probably comes around midway this year for a wave 5 higher. So what we're watching for this week in a nutshell is more follow through down below this 69.65 low, initially towards 68.50, which is this trend channel support here, and then below there we might see it unwind a little bit further, but at the very initial target for this pullback would be around this 68.50 68.30 area. Moving to currencies, sterling has held the break, which we've spoken about recently, and the break of course was above 140, the figure 140.20. All these highs which were unable to get any follow through rejected 140.10 a number of times, and then it popped and it's held above there, forming a little doji. Now, this was a really tough week to trade, and we had on a long sterling trade here, which was 130 points in the money. We just weren't sure how far the pullback was going to come after the CPI in the US came out much stronger than expected. We did advise just to square that trade up in case it pulled back below 140. It's held that support area, and right now it looks like we could see sterling push back up towards this 140, 167, potentially up to this 142.43 high. I do not want to see sterling pull back below 139.80, 140-ish, because that would signify that we're going to get a test of this uptrend support coming in around 138.50. Turning to commodities, gold has done very well since this double bottom was put in place, and I was of the thoughts we get up towards this resistance provided by this trend channel and then see a pullback. It didn't quite get there. It got up to around 1843 and then a pullback down towards 1808. But a good close on Friday, and that sets gold up for a very interesting week this week. What specifically I'm looking for is either a break above this trend channel resistance, let's say 1862, 1863-ish. A sustained break above there, I think, puts on the radar initially this 1875 high, but up towards this 1960 high would be the target that I'd be looking for. So watching for a sustained break above the trend channel resistance. Alternatively, let's say this 1860 area caps, we could see a retracement back towards trendline support and the low from last week coming in around 1805. So once again, I'd be looking to be a buyer, but into this is probably a better setup for me because we don't have to deal with the potential false break scenario here. I'd love to see a pullback down towards 1800, 1805 before that next leg higher commences. Finally, this week, Bitcoin. Now, Bitcoin has played out beautifully for us since we highlighted this potential topping pattern, which we called a diagonal wave 5 back in mid-April. And this first leg is a wave A down to 47,555 of a 3-wave correction, or wave A. Wave B, we had it topping out. A couple of times it looked like it had topped out, but this was a really emphatic bearish golfing candle. And from that point, we obviously had Elon Musk turning around saying that he was worried about Bitcoin. He wouldn't be accepting Bitcoin as payment for cars because of the carbon footprint used to mine Bitcoin. Bitcoin has fallen fairly significantly, and we haven't seen the ultimate low, I don't think, yet. I've been calling 43,000 to 42,000 for quite some time now as a potential area where I would expect to see basing before the next leg higher commences. What I mean by basing, I'm looking for these types of candles here, bullish reversal candles, this type here in this support area provided by this 43,000 low and this 42,000 high. So if we were to see some basing in this area, I think it would set us up for a long trade in Bitcoin, looking for a resumption of the uptrend. That is all for this week. I hope you're enjoying our videos. If you are, please feel subscribe to our YouTube channel or check out our TechFX Traders reports, which you can do via our website, www.techfxtraders. Thank you for listening and have a great rest of the weekend.